Hi, I'm Sean Worthington, and this is my theory of money. Money, the tokens that we hold, the coins, the bills, the little numbers that are in our bank account, those are actually part of a bigger system, an information system. In fact, it's a distributed database in which each one of us is in charge of holding a little bit of the data. Money is data. It tracks how much value we put into the economy and how much value we deserve to get out of it. The most important property of money is its counterfeitability. For something to be money, it should either cost more to counterfeit it than the money's value, or simply be impossible to counterfeit. This is why we used to use gold as money. Not because gold is valuable, it's because gold is impossible to counterfeit. If you want to create a gold coin, you have to go dig up some gold from a gold mine. And that process is so difficult that it costs more than the money is worth. Because money is data, any data corruption will lead to submersion. Counterfeiting is data corruption, and submersion is when the economy becomes weakened and more disorganized. Today, we are seeing things like cryptocurrencies in which they cannot be counterfeited because of the encryption that they use. So if your tokens cannot be counterfeited, now you've got money. That's what money is. Now I'm going to get into some really strange things that you might not have thought of that are pretty outlandish. And they center around an idea called emergence. Emergence is when you have a whole bunch of little components, for example, neurons in your brain, and then out of those components emerges something like consciousness. Now, what you might not know and what might be surprising to you is that you are part of a superorganism. This superorganism, well, we just call it society, or we call it the economy, so it's not that mysterious. Every day, 7 billion humans wake up. They decide if they're going to go to school or going to go to work or go shopping, what they're going to buy, what they're going to sell. How does this all get coordinated? Well, the answer is money. Money sends us signals. It tells us what to do. It tells us how to behave. If the signal is good and uncorrupted, then we have emergence. And if it's corrupted, then we can get submergence. When human beings first began to develop consciousness, we also began to develop money. Now that was about, at least 40,000 years ago, probably more like 2 million years ago. And at that time, human beings were just like animals, and we were interested in the things that animals are interested in, mainly eating and sex, also companionship and comfort. So, the first monies were probably based on that. The archaeological evidence shows that human beings used a type of money called Venus figurines. They also used a type of money that showed different animals that could be eaten. I won't go into exactly how this system worked, but it allowed for the first specialization, specifically that men could go out and hunt mammoth, a very dangerous task, while women stayed home and did the arts and the crafts and the clothing and the important raising of children. I would like to mention the system that we have here in America, the Federal Reserve System. But what is a problem or criticism of the Federal Reserve is the way that money is created and the way that money is destroyed. So anytime that you go and take a home loan out or a student loan out or other loans, money will be created so that those loans could be filled. And then when you pay off those loans, then the money will be destroyed. And this causes a problem. In the 1920s, the Federal Reserve, by loaning out money, was able to increase the money supply by 60%. So that's why we had the Roaring 20s, is because of all this extra money. And then we had a depression because the money supply dropped to 1/3 of what it was when people either could not pay the money back or did pay the money back. And that created the Great Depression. Now, since then, we have gone through lots of recessions in which there has been too much money created or not enough. And in fact, the housing boom and all of that money that flooded into the economy around 2000, I think it ended 2006, that was because of the Federal Reserve and the way that it creates money. And so that's why we really need to come up with a different money system, or at least modify the Federal Reserve so it doesn't create these boom-bust economies. Another criticism of the Federal Reserve is it allows the government to borrow money and create money and use it for things that are not cost-effective, to say the least, including funding wars and welfare programs and things that screw up our superorganism.